Welcome to Earnings Central. In this video, we'll break down Sanmina's first quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q1 was $1.98 billion. The company actually reported revenue of $2.01 billion, surpassing expectations by 1.5%. This quarterly revenue also marked a 7.5% increase compared to the $1.87 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q1 was $1.36. The company actually reported an EPS of $1.44, exceeding expectations by 5.9%. This result also reflects a 10.8% increase compared to the $1.30 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Sanmina delivered some solid numbers this quarter. Their non-GAAP operating margin came in at 5.6%, which was actually towards the higher end of their target range and showed improvement from last quarter's 5.3%. This was complemented by a strong gross margin of 9%, which exceeded their initial outlook and was up 20 basis points from the previous year. The company's cash generation remained robust, with free cash flow hitting $47 million for the quarter. This strong cash performance gives them flexibility for both strategic investments and returning capital to shareholders. Speaking of returns, their pre-tax return on invested capital, ROIC, improved to an impressive 23.5%, up from 22.7% last year, significantly exceeding their cost of capital. On the operational front, Sanmina made notable progress with inventory management, reducing inventory levels by 5% compared to the same period last year. This improvement shows their commitment to operational efficiency and working capital management. Their balance sheet remains one of the strongest in the industry, with $642 million in cash and essentially zero net debt, providing them with significant financial flexibility. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First, there's positive news regarding customer inventories, which continue to normalize. Management indicated they're in the 8th or 9th inning of the inventory correction cycle, suggesting we're nearing the end of this adjustment period. The cloud infrastructure segment emerged as a particular bright spot, showing strong growth potential. Sanmina is expanding its capabilities in this area, offering everything from high-technology circuit boards to fully integrated rack systems and liquid cooling solutions. They're positioning themselves to capture more opportunities in the growing cloud computing market. The defense and aerospace sector is another area showing promising signs. Sanmina has been investing in additional management talent and capabilities in this segment, seeing significant opportunities for expansion in the coming years. They've emphasized this as a key growth driver for their future. In terms of capital return to shareholders, the company announced a new $300 million share buyback authorization, demonstrating confidence in their future prospects and commitment to delivering shareholder value. This comes on top of their existing buyback program and provides them with significant flexibility to repurchase shares opportunistically. Looking ahead, management provided an optimistic outlook for fiscal year 2025, projecting high single-digit revenue growth. This growth is expected to come from both new and existing programs across their diverse end markets, including industrial, medical, defense, and communication sectors. Perhaps most importantly for long-term investors, Sanmina has set its sights on achieving operating margins of 6% or higher in the long term. While they're currently maintaining stable margins in the 5 to 6% range, management believes they can reach and exceed 6% as they continue to grow and optimize their business mix, particularly as they approach a $9 billion annual revenue run rate. Overall, Sanmina's latest quarterly results paint a picture of a company that's executing well on its strategic initiatives while maintaining strong financial discipline. Their diverse end market exposure, strong balance sheet, and clear focus on operational excellence position them well for continued growth and margin expansion in the years ahead. That wraps up our recap of Sanmina's first quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earning Central.